Well, we've come off some pretty bad years, and it finally feels like the capital market story is beginning to evolve into something a little bit stronger. But my question is this, do the green shoots that we're seeing evolving in the United States starting to poke their noses through the soil over here in Europe? Yeah. Is that something that can be sustained?
Well, look, it's definitely been a much better first 5 months of 2024. So 22, 23 were difficult years coming off the heels of a record 2021.
Yep.
If we go through the products, debt financing has been very, very robust, right? There's a lot of talk on Bloomberg this morning around how many rate cuts are there going to be. At the end of the day, if you look long-term historical trailing, the 10-year at 4.30, it's a reasonable level, frankly, in historical.
Market can live with that.
They can, in historical context. And what's important is spreads are pretty compressed. Very competitive debt financing market at the moment for
a little
for
compressed,
corporates.
They're very compressed.
Yeah, for sure. I mean, we have 8.2 on our high yield index. That's about, 360 bips over in terms of spreads over the Treasury. So reasonable levels. When we go to equity capital markets, we've started to see some IPOs in the US, and they've traded pretty well. So investors are seeing positive returns. In M&A, we've also seen green shoots. We've seen strategic bids come back to market. So that's been through synergies of combinations. They've been able to navigate higher financing that we've seen relative to the near term. We've seen 18 take privates greater than $1 billion. And we're starting to see private equity enter formal processes. That's a sign of greater confidence. Before, we were seeing more informal bilateral conversations, so there wouldn't be any taint if those deals didn't go through. Now we're seeing formal processes. Now, just on that point of is that coming towards EMEA in the UK, it's earlier.
Yeah.
But
How much earlier?
But we're starting to see it happen. I mean, look, Citi led the $14 billion of placement of London Stock Exchange on behalf of Thomson Reuters, Blackstone and the consortium. So follow-on offerings are getting priced in the region. Convertible bonds are getting priced. We led the $5 billion Alibaba convertible. This will all be a precursor to the opening of the IPO market. And obviously, Aramco will price probably during the course of this morning, and that's a very, very sizable transaction.
Yeah, that feels like it's in a slightly different universe to maybe some of the other stuff that we're talking about.
Sure.
My takeaway from Super Return in Berlin this week, though, was that private equity wants to offload, and it can probably do so with its really good companies. The cream of the cream, they could probably exit. The rest of the portfolio is going to be a much bigger struggle. So are we going to see a kind of stop-start story here where we get a few coming to market, the good stuff comes to market, but then we've got to figure out what happens to the rest of the portfolio? How much strength is there? Does it go beyond, when it comes to IPOs, you think the kind of the top end of what portfolios have in them? How easy would it be to offload some of the other stuff?
There's a big focus on DPI, right? You hear a lot about it. So what's the ratio, distributions versus paid in capital? So the pressure is certainly mounting. But private equity has options, right? You've got a very competitive debt financing market we've talked about. So you've got bank credit, you've got also the private credit as well. Sell-side M&A, we believe will pick up, and the strategic bid that's coming into the market is meaningful. And as the IPOs start to come, I think you'll get some very, very strong companies, growth plus profitability coming first to the market, and then we'll reach out. But look, I think you have depth of capital markets. You've got a decent financing market. So I think they're private options for private equity and also public options. And, that's a reasonable competitive universe that they have. They don't just have one avenue that they need to pursue.
Talk about the M&A story. What do you... Give me a few months ago, somebody said to me, "I'm seeing loads of deals," and you've seen some of those show up in the UK. There was a lot of activity that's starting to come through now. Just give me a sense of the tone of the conversation that we're seeing now. Is it continuing? Do you hear about the potential of more deals still to come? What is going on? What does the pipeline look like?
The pipeline's robust. The conversations are increasing. I think what's really interesting is the strategic bid that we're seeing. Artificial intelligence is driving a lot of that.
Yep.
Corporates today around the world are re-looking at their business plans and thinking, how does AI transform my company? And that is impacting their M&A decisions. So an example, Citi advised IBM on the acquisition of HashiCorp. That is an example. You saw the last couple of weeks Palo Alto Networks announcing their combination with IBM. You saw Microsoft's investment in the London Stock Exchange. We've seen OpenAI now, not just with Microsoft, but also announcing with Apple. So you're seeing these joint ventures. I was at the Data Cloud conference Monday and Tuesday this week in Cannes. The amount of conversation around data centers driven by AI, the amount of funding that will need to take place over the next 5 to 10 years is transformational. So AI is really going to drive M&A and transformation. And look, we've seen a weakness in software recently.
I was going to ask you about this.
Yeah, partly because of the distraction of enterprise spend around AI and data. Now, I believe, and we believe, that software will be a long-term winner, but they need to develop the AI incumbent capabilities before deployment.
So it's a bit of a zero-sum game at the moment. Okay.
I think so.